Yo, yo, yo.
Hey, Matt, how are you?
Good. How are you?
I was just finishing reading Supply Chain Technology.
Yeah, that's our new freebie thing that we're going to be putting out to
Well, I liked it
everybody.
because it made me think about something I was talking about with Riley this morning and about stagflation,
Yeah,
which honestly, after seeing that and talking to some people, I think that's the best we can hope for the next 12 to 24 months.
yeah. But so you can basically count on it not happening.
Yeah, exactly, exactly.
Yeah, take your best case scenario and scratch that one off, and
Yeah.
it happen.
Yeah, well, so I think you have a bunch of people still filtering in here. We'll wait for them, and then we'll fire it up. How are things in your neck of the woods?
Good. Life is grand, man. We got a lot of changes going on and a lot of good stuff to talk about. One of the things I want to touch on today, see if you want to, is on the second page. I think it says just think about it. I've been talking about um, seductive negotiation.
That was on the second page of May 30th. Yeah, third page, page 3.
Yeah, seductive negotiation.
Abs,
And
abs, yeah.
I've been trying to make it not sexual. And I had a thought about it. I'll talk about it when everybody gets on here. But it was just I was talking with my mom at lunch the other day and had a thought about like people want to be seduced. It doesn't necessarily mean a sexual way. It just means you want to be talked to in a certain way and just respectfully and whatever. And I told my mom, I said, she said, well, that could be taken out of context in the wrong way. And I said, well, just think about it. What do you think Eve looked like when she was 30 years old? No toothbrush, no razor blades, no
Hey,
fingernail manicures, pedicures.
maybe a better
So
way to people want to be courted, right?
yeah, and
Yeah.
it goes both ways. It's like men can be courted by men, women courted by women, without it having to be in a sexual context. It's just how your behavior is about how how you like when you meet somebody. Go back to your college days or single life days. You meet somebody in a bar, and you strike up a conversation, and you're asking people about themselves to learn about themselves because it's more of a uh, tell me about you kind of thing than let me tell you about myself. And the basic principles of courtship apply to negotiations, whether you're buying a car or a TV or a lumber or a business or just talking about getting market information from people. It's and what's interesting though, when I looked up, I was trying to find a book on seductive negotiation. That's the only thing I've ever stumped the internet with. There was nothing written about seductive negotiation, which I
Yeah, no,
thought was interesting.
that's a good. Well, let me kick it off. Introduce. Welcome to lunch with Lumbermen with the Matt Lehman from Lehman's Lumber Guide. We do this every Thursday at 12 o'clock Central, 1 o'clock Eastern time. Where we go over the dynamics of the market in the cash lumber market and panels market. And Matt, we lean on Matt's Lumber Guide and expertise with all the fine content he puts out every week. So there's a bunch of people. We got over 30 on LinkedIn right now. We'll kind of kick it off, Matt. And yeah, no, good point on the seductive negotiation. One of the things that I really read into, and maybe you can talk about it. So another dimension I was reading today,
Yeah.
supply chain technology, where we kind of talk about. It kind of goes through a checklist of what we're going to talk about a little bit today, and it made me really think. I read an article today where between 2008 and 2015, um, the federal funds rate was basically at zero, and our M2, which is basically the money that sloshes around in the economy, that when you get stimulus or checking accounts, money market accounts, anything that's accessible to buy stuff with immediately,
Right.
right?
Disposable income.
It grew at about 6% a year from 2008 to 2015. This is what Brian Westbury, the economist, put out. 2020 to 2022, zero federal funds. but the M2 grew at 18% per year, right? So his summary was interest rates in Fed funds rates, or Fed fund rates and money rate has decoupled, right?
Right.
So basically, raising the funds rate at this point isn't going to slow inflation down. So then I read this, and you may mention the word stagflation. I was talking to Riley, and he said, hey, maybe the best thing we can hope for the next 12 months or a little bit longer is stagflation, because the Fed's at a really precarious point now, where you've given the economy enough basically heroin for so long. If you just cut them off, you got a real problem potentially.
Yeah. Yeah. So does that mean or imply that we're going to be clipping along here at 10% inflation and call that stagflation? Is 10% inflation the flat line, or
Yeah,
it's
that's a great question. I know one thing that we know isn't true anymore is that word that sloshed around a year and a half ago called transitory, right?
yeah, that didn't last long. That was just that's like everybody lumber just says, "Oh, come on now,
Yeah.
give us a
So
break."
I kind of wanted to chat a little bit. I like that, and you said that's something that you put out free now. That content. I thought that was a really good write up, and Jerica did a good job on that one.
Yeah, it's basically the another dimension section of the report that Jericho writes every week. But we're just going to try to, just from a marketing perspective, we want to keep the people that have done the 2-month free trial and decided that the Layman's Lumber Guide's really not for them. We just want to keep in touch with them and show across the bottom there what the FTPs have done while they were not participating, just to give you a track record and keep you up with what's how our accuracy is, and kind of blow our own skirts up a little bit. And
Yeah, for sure. So let's set the stage. I was in Montreal last week, and then what we'll do is I want to look at your FDP, your forecast to kind of roll into that from May 30th. Up in Montreal last week, everybody was kind of coming off a high of 2 years, right? Really feeling good, and you can't blame them, because there was a lot of last 2 years, when you think about it, Matt, the best 2 years that I've seen in the industry since I've been in it, right? For the world that we live in, the traders we know, the mills we know. I mean, one of the mills said 2018 was their best year previous, and some of the months in 2020 and 2021 and 22, they made as much in 1 month as they made an entire year of 2018, right?
yeah, and did you notice also how people did nothing but complain about how busy they were?
Yeah, that's
That's the
so.
most miserable I've seen the lumber market in my history. People wanting to retire because it was too hard and they couldn't keep up with it. They were bitching and complaining about it, couldn't get this, that, and the other, and their bank accounts were just swelling.
Well, I think so. It's good. It's great. We were talking the other day. I think we're kind of starting to slide back into a market like it's been our historically in our whole career, right? Where
Yeah.
you got to really slog to make money and do things. And I think I came back from Montreal. Everybody was kind of optimistic, or was optimistic going forward. They were just happy to see people after 2 years, right? I didn't really pull much. Everybody thought there'd be a big V-shaped recovery in lumber prices, so that wasn't going to happen, right? And we come back this week, and like the Tom Petty song "Free Falling," lumber's going to
Saw
have to
that.
do something,
Yeah.
because it's that's where we're at right now, and it's across the species, right? It's across everything. I don't think inventories are as high as they were 4 months ago, but people aren't hoarding lumber right now, right?
Well, they don't need to be.
Right.
There's, they're. I said this before. I think the lumber industry, the buy side of the lumber industry, has played this thing exactly right. They've
Yeah.
been lean, and there's no reason to get unlean, less lean, because the builders told us from the beginning of the year, all the action is going to happen in the first third. The second 2/3 is going to be completions, and that's exactly what's happening. Less lumber being used. Even appliances are getting a little more easy to get. There's still some brick issues and that kind of some oddball kind of things. I've noticed lately more truckloads of EWP going down the road than I've seen in a long time. That seems to be loosening up just from the observation of what I'm seeing on the highways, but that's pretty interesting.
I was going to ask the users if or the if EWP is getting better. There we go. So a couple other things. Let's throw up your 12-month forecast for the 2x4 composite, because if I remember right, and I'm not just blowing wind up your skirt as you said, let's go back 2 months. You thought there'd be a little buy like there was, but you kind of called this, I would say. If
Yeah,
if I remember right.
We called the week 21 as being a miss, that the market was going to turn before, and actually my expectation was going to be about week number 19 when it was going to peter out and start falling, and that was pretty close. I think it was like week number 18 when it really first started falling.
So
but
I heard a great comment about you up at Montreal, right? Which was cool. I meant to tell you, I'm walking around visiting the different booths, and I walked up to one of the mills that a friend in the industry I know has worked at for a long time, and he's like, I like watching your show with Matt. He goes, I subscribe to Matt's. He goes, the funny thing about Matt is everybody always gives him a hard time for the 1 or 2 times he was wrong about something. And he goes, the fact is we're all wrong about stuff. He goes, but I'll be darned if that guy isn't right more of the times than anything, right? So his whole point was he loves watching it, loves subscribing to you, and I just thought it was pretty cool what he said, right? He's like,
that was nice.
And I know you you and I always laugh about it. Human beings, especially in our industry, always focus on something because they don't like it anyway, so they're going to focus on negative stuff. But this guy's like,
Yeah.
he goes, I follow Matt all the time, and he goes, I make a lot of decisions off of his forecasts, and it's a pretty good sized mill, which.
Yeah, that's nice, because I don't have a lot of avid mill followers, because they tend to think when I make the comment like for buyers not to buy, they can't make that interpolation themselves, like, well, if the buyers are going to quit buying, as a producer, what should I do? And the obvious answer is, well, I should try to start extending my order file a little bit, or I should be a little aggressive on my pricing. If these guys are going to stop buying, the market's going to reverse in 3 weeks. I need to stop saying that I've got a 3-week order file and be realistic about what's happening, and try to get people to engage. Even if you just get orders that are PTS, if you're a mill and you go like, okay, the market's going to get softer. So how do I want to be positioned in 3 weeks? So I want to be sitting here with no order file, a bunch of wood piling up and not knowing where the market is? Or would I rather have some order files that are not priced yet, that I could just price and say, okay, the market fell, right, you got me. So I'm going to adjust the price down for you, but at least you have an order. And mills, and I'm not beating up on mills, but they're the poorest marketers of the lumber industry, of everybody in the lumber industry that there is. They just seem to be more reactive than proactive.
So real quick, Tim said iJoy supply is better, steady, LVL still tough, and LSL tougher. Michael Shepard, 60-day lead time for EWP are now 30 days, so somewhat better, but that's for allocated contracts. So it sounds like our side of it, the lumber side, and like as you said, Matt, is starting to loosen up a little bit.
Yeah, and I think
thanks, Michael and Tim.
Yeah, thanks a lot, guys. The thing that's difficult to project is what's your demand going to be in 30 days? Because the only thing you have to look back on is like what's the market been like? Have the builders been really screaming for lumber, and I'm having a hard time getting things, but things are slowly, not rapidly, but slowly loosening up. Transportation, logistics getting better, EWP's getting better, lumber supply is getting better. The timber shortage in Canada that was supposed to be running everybody out of lumber, and Canadian mills. It seems like every time you hear a Canadian mill that's going to take some more downtime, the next thing that happens is prices fall $100.
Well, look, I mean, there's no doubt in my mind that when people curtail because they're building too much inventory, that's not bullish. That's more bearish, right?
Absolutely. Curtailments are never bullish.
And it always, and so I have that on my checklist to talk about. And one of the things that a lot of people talked about up in Montreal was, well, if things get any worse, we're going to curtail. I'm like, well, you just made $1 billion last quarter and you made 800 million. You're so what, but one thing that was true is some of the less productive, not the grade 1 mills that have a higher cost of production, they ran a lot more because obviously at $1,000 a thousand, you can get away with a lot more. But I noticed a couple of people are putting out their curtailment watches now, and I mean, I guess it may happen, but that's to me not real bullish long run.
That just, I mean, to me, that says like this, Sunil saying like, I see a problem coming and that I'm not going to be able to sell what I make.
Yeah, and I mean, they're getting in front of it and doing what they've got to do. The one mill made that curtailment announcement the last day of. I had a bet with a couple of guys that they do it during the show. That somebody would make an announcement during the Montreal show, and I missed the over under by a day because it was the day after the show was over that they made the announcement. So,
yeah.
So Tim said, I asked the question, are you seeing any slowing for new business or are people still straight out? Tim said, definitely slowing, still lots of projects to start. Lack of labor is contributing to the slowdown. Projects are taking longer to get finished. Yeah, you know what, Tim, I see that in my little area, neck of the woods, where I have neighbors that are trying to do projects and they're 6 months out to get any labor to do them, right? So
yeah, but there's also another thing, another statistic. If you keep where people are slowing their hiring, these big corporations they're taking some of the job openings away, and so there's the labor statistics for people that are quitting their jobs are still that those number of people are still rising. People, quitters who are looking for better jobs or higher paying jobs. But I think one of the things that's going to really be a difficult problem for all industries going forward is we spent the last 2 years with wage appreciation, and now you got minimum wage still at what, $7 an hour, but people paying $25 an hour to get you to come to work. So we're kind of stuck in this higher wage thing. Not stuck in it, but we've made it more attractive for people to go to work, and that's directly cut out of bottom line for people. So companies are going to be less profitable just because of their wages.
Certainly. Let's I want to bring up the Southern Pine chart again here on page 4 because I know we've talked about this, and Shane and a few other people in Indiana have mentioned that they've gone 90% pine. I'm seeing even more of it, Matt. We had another person up in Wisconsin yesterday, 2x616 number 1. They're starting to buy pine up there where they historically bought spruce, right? So that continues, and it should. Because of the low cost, it's the highest fiber basket, lower cost of production, doesn't have to deal with the same log supply kind of issues that everywhere else, and it continues to move. But so what do I read into this chart on Southern Yellow Pine, Matt? I mean, the Southern Yellow Pine market seems to be coming off. I know a couple mills talked to me about print yesterday, but I mean, things seem to be trading well under print, and people are looking for business, right?
Yeah, and if you look at the cycle, the way the pine market, the whole market goes, really is when we make our yearly high in March, or if you take either the March or May high, if the March high is higher than the May high, then that indicates there's been an early turn and the market's overly liquidating, and we're going to get a summer bump, which usually happens around the 4th of July week when vacations are their strongest and mills have their longest maintenance downtime. So the week of the 4th of July is probably going to be a week where we're going to get a little bump in price. It should probably start the week or two before that, which would mean the middle or the second, third week of June, you'll probably start to see some people buying a little bit because the market's going to be underbought. We're going to get a little bump, and then we should sell off again into the end of August. So the real dilemma here is from where prices are. We've got more production coming on. The treaters are not going to be, ramping up, stocking up a bunch of stuff for the fall. So there's really nothing on the horizon that's really positive for Southern Pine other than its value. It's just when it gets to be really cheap, then and you'll see treaters, for example, or truss manufacturers starting to load up on product just because the price is low and they know that their fall is going to be better than the hot August summer month. Is September, October going to be better. So the question is, do you start when that summer bump rolls around here around the 4th of July week? Is that a good time to start building your inventory up or kind of feathering in a little bit? And I think that depends on price. If price takes another strong leg down between now and 4th of July, it may be a good time to start looking at building some inventory and trying to get in front of the fall rally, which is probably going to be pretty sharp because, like we talked about before, nobody's got a lot of inventory, but nobody feels the need to have it.
Yeah,
And
I mean,
that's
look, I made a comment the other day in a publication. It was the Wall Street Journal that people, instead of buying 10, are buying 5, and I think people might have misunderstood that there's too much inventory at yards right now. That's not the case. We don't have the same buildup of inventory we have at yards. People have just tempered their demand of how they're buying stuff right now. I see that at the yards I go by on the train on the way in. They don't have the inventory build that I've seen in before. They have an adequate amount, right? And they're doing that.
right.
But
They
here's
got
one cool
enough.
thing, and you made me think about this, and I always think about this when you talk about it. This is at the store the other day, $5.28 for a 2x4 8 treated. $5.98. You probably can't see that for a
For a
2x4
stud.
for a whitewood stud,
Yeah.
right? And when you think about that, that 2x4 8-foot treated has probably about $100 cost of treating. I don't know about, and then
But with freight and delivery and all that kind of stuff, maybe $100, maybe $75, but it's certainly
yeah,
more.
but it gets touched more. It has to go from the mill to the treating plant, from treating plant to the customer. It shouldn't be that way, right? So something's got to give there. That's I think that's probably more where the whitewoods are going to come down than the pine
Well,
maybe coming up.
here's another thing. If you look at on those stacks in those home center yards, there's a big tag on there that of the stack that's above the one that they're pulling from. There's the next one in line to come down. Look at the date that product came in there. I'll bet you that treated lumber has been there since January or December, and the stud's been there since probably April.
Yeah, that
So
could be. I
it's
mean,
that
everything
current.
looked. I didn't get a good look at when the date was. I'll have to check that when I go in next time. The other thing one of the people mentioned to me on Twitter is they noticed that even the number 1 grade in some of the stuff in pine hasn't been what it's. Maybe you've got better feedback from this. Do you ever get feedback that the grades are dropping a little bit, or I mean, like if somebody went at me on Twitter about how they buy number 1 all the time, and it sure doesn't look like a number 1 a couple of years ago, right?
Well, normally the thing that's happened that's changed significantly is barcoding, and if you're looking for some better quality lumber, ask the mill if he's got any barcoded product, which is the stuff they give to Lowe's at Home Depot, because that's the appearance grade. So what's pulled out of it's a number 2, but it's got the number 1 appearance. So the number 1 that's going to be left now, if they're pulling for home centers, they're pulling their visual number 1 out, and they're leaving their structural number 1 in, but their visual number 1 grade goes into the barcoded number 2. So I was talking to a mill last week that said that they've been shipping their barcoded product for their just regular framing package because the home centers aren't taking as much of it. But if you're really the good looking quality product, you need to off that barcoded product that's going in Lowe's and Home Depot.
Yeah, that makes sense, Matt. And I think sometimes people forget about the difference between a visual and a machine rated. The visual override, obviously, as a human being, putting the eyeballs on it and seeing how it looks versus after it's been structurally graded too.
Well, also the visual, the structural part of it. The machine graded, you just reduce the amount of allowable wane. I mean, we just call it pencil wane. The size of a pencil is along the edge of the.
Or as the youngsters call it, Lil Wayne.
Lil Wayne.
I think he's.
Yeah.
So look at one other thing I want to pull up here because I have lost track of this. Panels. Let's take a look at the OSB. I have been having a hard time getting a grasp on what's going on this on page 8 on your platform. Thank you, Jory. What are you hearing on OSB? Because I haven't seen a lot of it trading. We traded the heck out of that, or moved the heck out of that, buying and selling on the platform up until like 2 weeks ago, and it's kind of slowed down. I don't know what's going on there. What kind of feedback do you have on OSB?
Well, I think I heard a guy talking about the other day about how that who had the fire? Was it?
It was high level. Was it Tokel?
It was Toko, yeah.
Yeah.
And how that one plywood plant that had a fire was going to disrupt the entire panel market for the rest of the summer, which I thought was absolutely ludicrous. I mean, it's like you got one mill, maybe. I mean, you take one mill's production off for the rest of the year, you're not going to be catastrophically, devastated by it like when we had the resin freeze. But I'm not hearing anything about OSB that's alarming that says that there's a shortage of it. It seems to just be in a little spot where it's just, OSB tends to get in these spots where it goes for like 12 or 18 weeks where it just does nothing. The supply and demand is equalized, and I think that's kind of where it is right now. We had this huge price decline when everybody caught up and got their contracts, got overdone on the contracts. I'm still hearing contracts that are trying to get liquidated to just keep from being overloaded. But I think the OSB market right now just appears to be uneventful, and there's nothing to be afraid of on either side of the market.
That's a good point. I have a little note here I wanted just to bring up with you. I think the way I kind of summed up things is things are still going to be good in housing. They may not be what we saw the last 2 years, but we certainly are probably going to pull back a little bit so we can get closer to what we can actually complete. Does that make sense, Matt?
Yeah, we talked about at the beginning of the year with 1.2 million completions and 1.5 or 9 million or 7 million starts. Those numbers got to come together, and I still think that we're going to end up around about 1.5 million. We're going to spend the rest of the year increasing completions and decreasing starts, and I think the number we settled on the end of the year is about 1.5 million on both, which should be a significant increase in completions and just a moderation of back to normal starts instead of focusing so much on starts.
Well, that's good. Well, let's put some bookends on this. Did you have something that you wanted to bring up to show? I saw you and Jory going back on something.
Well, that was the another dimension thing that was encouraging people to, if you haven't had a 2-month free trial yet and you'd like to get the another dimension and the historical, and I say historical FTPs, we're not going to show the future FTPs because that's not fair to people that are paying for the subscription. But you can look back on a weekly basis and see like how accurate were we, and we've been doing our education process right now. The classes that we're doing are trying to just give people the encouragement and wherewithal to be able to act on those FTPs. It's like my son said the other day. He said if we could just give you like it's a copy of tomorrow's Wall Street Journal, just give you the FTPs and say if you just did nothing but follow the FTPs, you'd be fine. But everybody needs to have this constant reinforcement and encouragement that this is going to be this is another one to trust. And so
Sure.
that's what basically the rest of the whole publication is about, is just reinforcing those FTPs are legitimate and they're the best tool out there for forecasting the market.
I have another question for you on real-time pricing, but somebody on YouTube brought up a question, and I had this on Twitter the other day too. It says, we are building a house, and I'm guessing this may be a person that just is buying a framing package. We are building a house, and I'm delaying buying our lumber package. Do you think lumber will fall to the 400s, aka pre-pandemic? And also, what is the lag time for commodity and end user price? So do I think it's going to fall to 400? I don't know, but I doubt it. And if it did on a CME type of basis, you would probably not see that anyway.
Yeah, you're not going to see it.
That's just
you're building a house. You're not going to see it.
Custom. That's just a guess on my standpoint. I think costs are a lot higher. I I don't know what part of the world you live in. So if you're buying lumber out of Canada or spruce, their costs are certainly a lot higher. And I don't see the prices going out of pre-pandemic levels in the Southeast, just with inflation and so forth. The other question is, how long is the lag time for a commodity and end user price? It depends. It depends upon what area of the country.
It's about 2 months.
That's exactly what I said the other day. It's about 2 months. Okay, it's exactly right. I mean, where you sometimes see the changes the quickest, in my opinion, this is just me, is at home centers, at large chain home centers, because they don't buy in the spot market. They more adjust to the real-time print market on some type of lag, but it's a lot quicker because they don't really build an inventory that has any long-term costs associated with them. They got contracts with mills where they're paying more of a real-time price on a regular basis. They pay a premium for that for the wood they get, but you could sometimes see it better at a home center than you will at your local yard. Now, with that, I'll give you a caveat. Your local yard also adds a lot of value that a lot of people don't. They give you a lot of white glove service. They deliver a lot of other things to you that normally don't. And in many cases, they have so much business right now, they don't have to lower their prices.
Well, here's another thought too. Most
Yeah.
home centers have, for the person that's asking the question about the custom home, they operate off of vendor managed inventory. So they've got wood in warehouses and reload centers all over the country. It's literally owned by the producer. It's still owned by the producer. So if Lowe's or Home Depot, for example, this week needs a load of studs, that they're going to call the the reload center and say, bring me a load of 93-inch studs to Charlotte, North Carolina. And it's priced at the current market. So that means that they're priced at a rising market. They're priced at the market all the time. In a falling market, they're priced. They're not price. Their new price is the falling prices, but it's averaged in with their older prices. And they have a larger inventory that to work with than most smaller independent yards. So I found the independent yards are more likely to be able to respond to a price decrease. And most of the time they end up eating some of the price increases, but because of where the home centers are lagging. But if you're building a custom home, the best place for you to be able to buy your lumber is probably going to be from an independent dealer sometime around in July. That's going to probably be as good as price. But you're still not going to see $400 lumber. You're still going to be looking at lumber that's going to be, close to $1,000 by the time you pay $600 at the mill to get it, $100 for freight to get it there, margin, handling, averaging in with other costs. You're not going to see a $400 number for product that you're going to be able to buy to build your house with.
Unless remember other items like 9-foot studs. I mean, those have been trading pretty, even at discounts, obviously to the high prices, but they're pretty liquid and getting bids because those also go into multifamily, right? So
Right.
on the whole framing package, I don't think you're going to see much go back to what it was pre-pandemic. That's just my guess. And Jim was saying up here, waiting a month or so from now, kind of what Matt said, to purchase lumber packages will allow you to see the most of the recent price drops. Right? So one of the things, hopefully, just by watching this show, you can bring more information to your seller. Because honestly, up until a few years ago, most people that just bought lumber never knew when the price moved very much because they weren't into that. They weren't into in the good old boys club that showed that, right?
Yeah, and the other thing is there's going to be a big difference in the lumber that you buy for a custom home than the lumber you buy from a production builder, because they build in a price. They price their homes based on, before the pandemic, the lumber was the number for their lumber cost framing packages was about $1,000, and that's when lumber was about, their cost was about $500. So they had that cushion. They could make a little more money while it was lower, but it was higher. They didn't have to pass that price along. So they're still going to be using about $1,000 cost basis for their framing packages, regardless of what lumber prices do.
All right. Well, I'm gonna put the closing comments on here. If you enjoy our show, one thing that Matt and I could use is your business, right? So Matt is Matt at Layman's Guide. We'll throw up his email, Matt at laymansguide.com. Send him a note. He'll get you set up on his on his subscription, and he gives it to you for free for a while to see if you like it. But like I said, the feedback I heard up at the show from big producers, they love looking at it. And if you got big producers looking at it and you are somewhere in the supply chain, you should probably want to take a look at it also. So here's another one. Excellent content, guys. Also, I recommend checking out Layman's Guide, folks. Michael Shepard. We are firm believers here at Encore, and he has been spot on when you're talking $1,000 volatility. Well, you do the math. Yeah, man, Matt. I mean, you can't get a better compliment than that, like somebody from Michael. And everybody, you should try that. Also, sign up at mxlumber.com, Materials Exchange. We're the only digital exchange, and we can give you this content on here because we have users using our platform, and we continue giving you this content on here if more people come on the platform. So come to mxlumber.com and go to registration or get started, and we'll get you started on a demo and signed up. One thing I did want to push, one of our super users put a bunch of Euro up here today. He wants to move 2x6 16s out of Florida and Texas of premium Euro prompt and 2x8 16s. So if there's any concrete people out there that like 2x8 16s or anybody else, we've shipped it all the way to Colorado. Come on our platform or DM me, direct message me, send me an email, and we'll get on there.
I want to mention also, we're in the process of working on our free lumber index. So we're going to be.
That's what I wanted to talk to you about. Yeah, we're
really close to that. Hopefully, it's probably going to be the end of June before we have it available. But what we're going to offer to the industry for free is random length prices. I would say random length meaning 8 to 16, 8 to 20 tallies of 2x4 through 2x12, east side, west side, southern pine, western U.S. lumber, probably coastal dry hem fir, green Doug fir, and British Columbia 2x4 to 2x12, and probably 2x4 to 2x6 east side spruce. And the idea is just to have, I tell people all the time, you know the price of your lumber better than I do. You don't need a publication to tell you what the price of your product is. I mean, you need to do your due diligence to get your best prices. The purpose is going to be to show you the trend, the momentum, the direction, and to just give you some other options other than having to, I've gotten rid of our prices on our reports over the last couple of months. We're going to put, and that was to make the transition to offer them back for free.
Here's one of the Stephen Vowell said, little guys rely on Layman's Guide as well. So
thanks, bro.
Yeah, there you go. I love it. And Stephen asked if he missed anything. I just want everybody to know that's signed in late or haven't been able to watch this. You can go to LinkedIn, to the Materials Exchange LinkedIn site if you want. And Jory does a great job putting up all of these historical ones. You can rewatch it again. You can watch it on YouTube. You can watch it on Twitter. A lot of people in Montreal tell me that they don't have time to watch it during the day, especially if they're in Western BC. So they listen to it in their car on the way home. So that's kind of cool. Shout out to everybody listening to that in their car on the way home on a recording later. We appreciate it, whether you listen to it live or you listen to it later. We'll finish off next week or tomorrow, Friday, with our 12 o'clock show, The Smart Market, and then we'll continue with our shows Monday, Tuesday, Wednesday. I will be on next Thursday. Please show up, tell a friend, and make sure you sign up for Matt's Guide if you haven't done it already, and I think you'll be smarter for it.
Thanks, guys.
Thanks, guys.
Appreciate it, Ash.
Yep.
Thank you all for coming.